Good morning, everybody, and welcome to the Trading Market Technicals morning call video for June 19th. Pretty much a lackluster day yesterday, digesting what was going on in Greece on Sunday night's election votes. And we talked about having some event risk coming. G20 summit leaders are meeting today. We have FOMC statement, and that's going to be really a big key. Tomorrow's going to be a big day, and I'm hearing a lot of people, institutions, we're all talking about asking for QE3, and I possibly think if there's no statement like there was the last time, I would imagine that there'd be some sort of a sell-off. A lot of buying into anticipation of a QE3, so that's something that we really need to keep an eye on. However, market looks pretty good. We're definitely not in a rip-roaring uptrend, that's for sure, but we do have a lot of improvements. A lot of key groups and key stocks that that trade people follow. Amazon, for instance, acting really well. Industrials doing well. But the key leaders of the group, such as the transportation sector and the tech sector, did well yesterday, and that's something to a big improvement. FedEx reports this morning at 7:30, right around that time, and that's going to be a real bellwether, a barometer for the economy. So that's going to be watched very close. So that's something that we need to take a look at for today. But tomorrow is going to be all about the Fed, and that's going to be the bottom line here. We've got the Greece elections out of the way. They're putting their governments together, and then we'll take it one step at a time. I do think that for one point, the market is poised for one more sell-off and then a move higher, some sort of a rally into the end of the year. We usually get that like we did last year. But we'll take one step at a time and wait and see. Again, not much really to talk about. What I have in front of you is the E-mini S&P 15-minute chart. And I took a 15-minute chart out to show you where have we been from Sunday night, 1347 high, sold off pretty much most of the morning on Monday, and then we rallied back into the close. And as you can see, last night we really haven't done much here. Pretty much lackluster sideways moving. We're just catching a small little bid right now, going into the early morning hours here around 6:30. So as you can see here, sideways price action, waiting for some sort of anticipation of the Fed, and that's what we're going to probably be today. Is going to be sidelines, and it was very boring yesterday looking at trade. And same here. Here's a euro dollar, and as you know, euro strength puts in market strength and inversely correlated with the U.S. dollar itself. And as you can see here, same chart. If you take a look at the minis before that, we roll all the way down, and then it actually started coming back. And last night, pretty much lackluster performance here. Again, waiting for the Fed to come. Market internals pretty much flat. We didn't do too much. Advanced decliners, advancing shares 11503 versus declining shares 1635. Pretty much flat across the board. New high 64 versus new lows 36. So that's 2-to-1. But pretty much flat. Market momentum indicator is still about 101. I'm not going to show that to you today again, guys. There's really no change. So we're at kind of a overbought readings. McClellan oscillator now is reading up at those high levels as well. Same reading from yesterday. So caution is definitely warranted to the long side. If you are swing trading, I would bring your stops up. If you're day trading, maybe reduce your share size to the long side. Anticipate some sort of a pullback here. Again, it's all about the Fed. So whatever happens tomorrow is going to be dictated on where the next, what would probably be the next trend, or at least a short-term trend, a continuation of an uptrend, or do we pull back down to that 12, maybe that 1291 area, which has been really a key support area for the last several months. We've been running back and forth around here. So that's something that we really want to make sure take a look at. And again, lackluster day, and basically the best way to kind of trade this market is look for some sort of volatility, but good volatility, not anything that comes out of Greece. The market runs up, runs back down again. That's just going to shake out the longs and the shorts. That's not what we're looking for. So any maybe news-driven stocks, some earnings plays, maybe that might be the case here. I've been looking for that, trying to look for that quite some time. But I am taking a step back as far as trading is concerned, just waiting to see We're at these levels here. Do we break higher or we break lower? And I want to keep the palette dry here, so if something does happen out of Greece, you can react with full force. Okay, so euro dollar, as you can see here, nice trend lower, sell the news mentality, and now we're trading flat. And that's something, again, that I want you guys to be aware of. Now, here is what's interesting. I mentioned that we have some market divergence with the IWMs, which is the Russell 2000 ETF. They're lagging between the S&P and the Dow Jones, the transportation, and the Qs, which is the technology sector. Now, this is lagging. That does not mean that the other indices can bring this up along, and it can. But it's something we want to watch for, because if the Russell 2000 does not move, you're not going to get much of a big push to the upside without the small caps rallying along with it. So just keep an eye on that. Be aware of that. And you can see here in the spiders, we had a nice little move up higher. We are trying to break through this little area of resistance here. The next move is going to be 135. It's going to be a big spot, which is the 50-day moving average. It'll come right around this 135 area, 135.19. But look what happened here. Lack of volume, no volume. And I get a lot of calls, and people say, oh, does volume matter anymore? It sure does. Now, since the financial crisis, volume has diminished greatly, but it's still an indicator to be followed. There's no question about it. Volume is key. And as you can see here, we really didn't do much here yesterday as far as volume is concerned. So that's something that I want you guys to be aware of. Take a look at the diamonds. Same thing. Lackluster volume the last 3 days, rolling back down again. Now, that doesn't mean that it can't be consolidating here, but just something really to keep an eye on here. I like to see a low volume pullbacks, not on the way up, and that's something that that's concerning to me. We do have our MACDs and our stochastics here. MACDs rolling up real nicely. Overbought in the stochastics. Again, just a signal. Nothing to react on, but just be cautious with the longs. Now, here's what I like. Transportation, a big leader in the indices that we follow. Big increase in volume, as you can see here. Broke above the 50-day. Had this little flag pennant formation here, and we broke out of it. And we were out of our Bollinger Band here. So, big engulfing candle. Now, today, if the transportation probably is going to get its cue from FedEx this morning, so if we can, maybe if we do get back and we maybe just come back down to this 50%, we don't want to lose this more than 50% of this engulfing candle to continuation of being bullish, and then rally up higher. Then I think you got some sort of more upside, and I do like this. Volume bar, and as you can see here. Believe it or not, stochastics are not overbought as of yet. Okay, so we do have some room to run to the upside. That is a big positive. Transportation sector. So that's something to keep an eye on today and tomorrow. And look at the Qs. Same thing with the Qs. Broke out his little consolidation channel here. Still not overbought. But again, lackluster volume. I don't like this volume. I like to see this volume being up in this 47 million area for the day. So that's something that's concerning, and we do have the 50-day moving average around 64.20 that we need to get through. So a lot of positives for the market. Again, I think the market is ready for some sort of a pullback, and again, we're going to digest what's happening. We're not going to trade off of just some sort of hunch here, but we do look healthy to the upside. I do think that after the FOMC, and if nothing crazy comes out, we could rally further, at least maybe to test the highs. It's possible, but I do think there's further upside if everything stays status quo. And as you know, with this market, anything could change. So the Fed's going to be a big key. G20 summit in Mexico, another key risk factor. So we want to keep an eye, keep the palettes dry, and then let's see what happens for tomorrow. Tomorrow, again, will be a big event. And I do think that we're probably going to have it's going to be, usually is pretty quiet going into the Fed FOMC statement going into tomorrow. So again, don't overtrade. Sit back. It is the summer months. Let's pick quality trade setups. And if you get stopped out for a small loss, no big deal. You could get back into it, and easily when the market turns and the market is healthy, it's quick and easy to make back any of the small losses. But when you take a big loss, You're going to take it's going to take a few days, maybe a few weeks, depending on the type of trader you are. So keep the pallets dry. Remember, cash is a position right now. Have your stops in place. Let's get through the FOMC, and then let's pick up some good setups. I am seeing better trade setups here to the long side as well. So we'll just have to take it one day at a time. And again, just reduce your exposure until we get through these risk events between today and tomorrow. Have a great day, everybody, and I'll talk to you tomorrow. Take care.